Thank you all for coming. We have a great session today about something that if you joined, you care about. And if you're not here, you probably don't care about. So I get excited. I'm one of the few, I think, that wakes up in the middle of the night thinking about life insurance and annuity self-servicing, about the service world, about what we can do to improve. So I'm really excited to have Lori and Leah here today from Modern Woodmen, as we're going to talk about life insurance in a self-service world. I know I introduced myself if you came early. I'm Dustin Yoder, CEO and founder of Surify. I'll give a little background here in a moment, but thank you for being here today, and I'll do my best to let Lori and Leah talk more than me, but I'll be the moderator. Lori?
Hello, everyone. I'm Lori Serrano, and I am the Director of Operations here at Modern Woodmen.
Leah.
Hi, everyone. Coming to you from Davenport, Iowa. I'm Leah White, and I am the Director of Marketing at Modern Woodmen of America.
Well, that's us. We're gonna be talking shop today. The little agenda here. The first part, I'm gonna give both a quick overview of Surify and why I hope you allow me to talk about this conversation, this area. And secondly, we're going to dive a bit into the data around the industry. And so we're gonna spend a good amount of time, call it the latter half or more than half, with Lori and Leah talking about Modern Woodmen, how they see servicing and the challenges, et cetera, which I'm sure many of you are facing, or you probably wouldn't join because this is not something that everyone dreams about. So a quick overview here. The reason I'm here, we put on a webinar series this year, and we're having a lot of fun with it, and specifically because Surify it serves life and annuity carriers with three modules. We're going to be talking about the lifetime service module here on the left, but ultimately we have a configurable e-application to create direct-to-consumer agent and call center sales of life and annuity products. We have Lifetime Engage, which is our holistic gamified experience to bring user engagement, social education, IoT to life insurers and annuity companies. And then, as we're going to talk about today, lifetime service. The other thing, to build a little context around what all of us are facing, I think, the reason why we know a little bit about this area, or maybe a lot of it, more than other people that don't dream about this, is lifetime service sits on top of your existing cloud-based or on-prem / data lakes in the policy administration space. So today we're going to be spending a lot of time talking about that front and middle layer where the consumer or the agent or omni-channel can make these changes and really be served. Whether that's web or mobile, right? We at Surify see that the life insurance is quite behind in web and mobile. And ironically, we see tons of action on the mobile side when insurers have it. I'll call that out that, when we walk into life and annuity companies, much of the time they talk about purely web. And in reality, when you look at whether that's purchasing, servicing, et cetera, the amount of people coming through mobile is actually astronomical, as high as like 70%, especially depending on if you're communicating through email, et cetera. So to look at lifetime, service, I think you have web and mobile applications. You have the tracking of pending applications, which we put into service, the changing information for that policyholder, billing payments, and even when you look at servicing, chat, video, co-browsing capabilities, email, text, push, documents, policy display, these all fall under servicing because the customer is the one we're looking to service, and they want it the way they want it. They want to see what they want to do. They want to change what they do. At the end of the day, I think we all want to look at the results of why today servicing is coming to the forefront as we're here in 2021. And it's really about, we think, looking at improving persistency, offering the 2020 experience, which now is required, looking at increases in net promoter score, reducing lapses, and ultimately looking at driving lifetime value through the opportunity, because we all earn it, to drive I'll call it new sales, et cetera. But why are we here, right? Why I began this journey with Surify back in 2016, and we're in 2021. And I think the reality is there's two factors. One, more and more ourselves, our parents, our grandparents are now using Uber, Zoom, and Amazon, all of them actually. And two, COVID drove the world to literally, be separate, whether it was by a room or thousands of miles, to need to communicate, to service, to engage, to buy things, right? And so COVID really poured fire on this. Now, life insurance couldn't change that fast. And so what we have seen in Surefy is that, we're going to look at some starting points, but also we're going to spend talking about the fact that, COVID hit, but there are challenges with changing in a millisecond. And so I thought it was more, I'm going to say, comical to look at where we're really at as the insurance world. And what I mean by comical is we have some baselines, but the bar is low right now. So for example, life insurers on average have a customer login, right? 94%. This is good, right? This is a good start. 78% of insurers allow customers to control their communication preferences. And I thought it was funny, 89% allow the customers to manage their passwords, right? These are low-hanging fruit. We are there. So if you don't have a portal, that's probably an issue. And if you don't allow people to service through web and mobile, that is a big challenge. But most of us are at this spot. However, when you look at how CIOs are rating their portals and how people are seeing them, 8% of them say they have a very strong front end for their customers. But to contrast that, 73% a very poor experience. So if you weigh that, there's a good amount of in between, but ultimately, if you look across the reporting, Celent does a great job here in Navarca. We're relying on quite a bit of their data here today. You see that the industry is not in the ideal state comparing that with others. And then you dive a level deeper and you ask, what can someone do from these portals? This is where, to be frank, across the industry, it gets much more dire, where name changes on a policy, 12%, requesting a copy of the policy, 20%, view policy contract. And so let's call out the elephant in the room, which is that we were having other parties do this for us, specifically our agents and distribution in all fronts, but now we have people who are separate from those and what the client's expecting, whether they want to update their email, change their beneficiary, to really have sub 50% on all these, when many of these are basic requests that maybe happen every couple years, maybe happen, once a year, et cetera. It's just we have a very low bar. And then as you look at more complex changes or requests or service capabilities, dividend withdrawals, benefit rider change, surrenders, payment amount change, in many cases, this is sub 15%. Of insurers have this. So really, you start from the top. Yes, we have portals, but after that, the world isn't is nice as all of us would expect. All of you are consumers here on the call. You expect this from everywhere else, but yet, this is something we literally have to download a form a lot of the time, fax it back. I mean, I still have those. I buy a lot of life insurance due to the business we're in. We study it. I mean, the amount of times where I'm doing something digital and then I download a form and, I can't e-sign it, so that I have to print it out at the office because I don't have a printer, et cetera. It's crazy. Then you look at payment billing. This is a big subject. Yes, less than 50% you can view your payment or pending payments. Okay, we let people pay with banks. This seems to be a norm. Online, I can update my banking information, but things like auto pay, or in this case, my credit cards, definitely more, or setting up those reoccurring, et cetera. When it comes to servicing features and all digital, we see a great, a lot less data here and also a lot less maturity. And I know there's reasons for a lot of these things, but this is the state of the industry that we're all in and working to solve. Another viewpoint is customer front ends and mobile, really to only have 24% of CIOs and 24% of CIOs rank their mature service front end. Really, that shows you that 75% have an immature front end, right? Or that would be the perception that they're giving off. And then another is mobile optimized. Once again, we commonly see most in life insurers do not have a mobile application, let alone even mobile optimized. Yet when we talk about how we all spend our times, yes, we work on our computer, but the way that I answer almost everything, including a lot of my work stuff, is actually on my mobile device. And so this just really, once again, another challenge. another thing we're all going through together. The last thing to look at, so Surefy has been doing a lot of these projects, getting these deployed. And there's a big part in the beginning, which is, well, talk to me about I have something horrible from 95 or maybe 2005, right? But I need to sell the CFO and I need to really do a business case on the KPIs and core metrics that we need to use to transition. We get it. Everything needs to have one. I think that's the right approach. So where are people looking? They're looking at, well, if we're going to sell, let's say through digital channels or et cetera, or put new products there, we have revenue growth potential on both, we can tie ROI to these new products coming on servicing. That can be a reach, right? But that's one angle. The second is traffic, right? Well, a lot of people are well, how many people are we going to get there? And there's always this chicken and egg. But ultimately, when people have digital properties, they're showing such great adoption. This even goes to the mobile side. They couldn't even tell you what they would get or not get. So once again, there's a chicken and egg of that data. But showing that, NPS go down here, user satisfaction and NPS increases, and thus kind of has a reverse effect to traffic goes up and then revenue. This is how people are building these cases. The other is cost reduction, probably the biggest case. Very commonly, people look at all the call center requests, all the faxes, all the labor provided, and they say, if we did all this digitally and we started to train our new policyholders to do that digitally, train meaning tell them they even can, we could dramatically reduce FTEs across multiple divisions. That falls under productivity, right? Being able to cut out human labor and put in digital processes for these things. I'd go as far to say the humans on the other end, the policyholders, all of us want this. So it's a win-win. And the last point here is sometimes when people are hey, I don't really have an ROI here, 2020 is here. Consumers require it if we're going to be a company of the future. I don't know if everyone saw Lemonade released life insurance yesterday through Bestow, and there's Bestow, Ladder, et cetera. If we're going to be here and compete against them and create the next generation, we got to take a step up and give the consumers what they want. The last point I'll leave you with, I think this is a very well, almost 200 people here on this webinar right now, which I will admit to all of you, when we were releasing this, I didn't know how many people would come, because self-service, I'm not sure who cares about it at all times. But what you do find right now in 2021, I think COVID has a lot to do with the kind of the bow that's put on top of this. 100% of life CEOs rank digital as a top 3 priority. So everywhere you go, and if you look at all the reports, the great reports Celent and Navarca are putting out, IT Group, Forrester, Gartner, every single one of them are this is where people are investing. And there's even been shifts in COVID. If you look at spend and IT spend, it's actually shifted over to digital. So, that's why we're all here today. And let's jump in. Let's talk to the real experts here, Lori and Leah from Modern Woodmen, and kind of take the conversation and get in the weeds here. Because many of you here most likely are dealing with these challenges. So, Lori and Leah, let's start off, kind of with the basics here. How does the life insurance industry, and specifically in your group, Modern Woodmen, define self-service and servicing capabilities? Lori, I'll throw it to you first. Sorry.
Thank you, Dustin. There really are 2 elements for self-service in the life insurance industry. So there's a member perspective and also an agent perspective. And I'm going to touch a little bit on the member perspective. Of course, self-services will provide tools and information to our members so that they can do business that may fit better with their schedules. Instead of being tied to a specific time to contact our service center. And later on, we're going to address the specific self-service transactions we are looking to provide through our member portal in just a little bit. Leah, go ahead and tell us a little bit about self-service from a field perspective.
Thanks for having us here today, Dustin, and I'm excited to be here with Lori. And when we use terms like member, we are a fraternal, so when people do business with us and buy a product, we don't call them policyholders or clients. We refer to them as our members. So just to share a little bit about, you're going to hear us say that a lot, very ingrained in who we are and how we approach things. So Dustin, I think that you laid the groundwork really, really well. We are really consistent within the industry. And I think there is a lot of variation within the industry just based on how you're structured. And so for us, we feel that our agents are well positioned for self-service when they can have the resources, information, and tools they need to do their job effectively. And one of the things we ask ourselves a lot is, are we easy to do business with? So can they make the sale, provide that service without reaching out to us or needing that additional assistance? So ideally, that's what we want to be able to provide. Now, we feel that we're really well positioned for this because we are captive. So our reps only sell our products. So we're able to train and provide that one singular tool set for them to use. So that is an advantage for us in how we provide that service. But also for us, we're not a national brand. We don't nationally advertise. So in our communities, Modern Woodmen is that local rep. So we need to make sure that we have that tool set and that we're arming them to provide that service, because commonly for us, that member may feel that reaching out to their rep is self-service. So we have some work to do, just like everyone else.
Modern Woodmen team, et cetera, you can ask right in the chat on the right-hand side, and we'll bring them up at the end. So, Lori, I have a question for you. This is actually, I think, a lot of the reason why our industry is in the state it is roadblocks, like the challenge, right?
Sure. Thank you, Dustin. And, the only item that comes to mind in looking at some roadblocks is our back-end automation that goes along with those self-service transactions can sometimes be challenging. So we're working with newer code with the Surify platform, and sometimes connecting that to older systems or multiple systems can prove to be challenging with that flexibility. And this next item, I really wouldn't consider as a roadblock, but I think it's important, one, for everyone to think about, and we're consistently addressing this item with platform, and is probably at the top of top of the mind for everyone, and that's security. I don't consider it a roadblock, but I think our security team is involved with any discussions, or many discussions, I guess, and to ensure that we are protecting our members' data at all times. When you think about that member portal and our members going to that, the data is very important to protect.
Mm-hmm. And I guess one of my questions, when you guys are running into these operational roadblocks, or like you talk connection to backend systems, do you guys view a crawl, walk, run approach? This is common in our, at Surify, but have you seen that you started out before even we were involved, and you had 50 things you wanted to do, and have you had to look at it in chunks? Kind of a tactical question, but what, I guess, is that part of your guys' DNA? Or are you guys looking at it we got to do these 100 things and then we'll go live?
Well, and I think 50 is probably an understatement. There's many, many things that we want to do, but you do have to look at crawling, because if you take it all in, it's too large to do everything that you want to do. So for an example, with the self-service transactions, it's important to give that to our members so that they can service or go to our member portal and at least do some of the service transactions on their own, as well as we would love to get that back-end automation in, but maybe that's a little bit later down our roadmap. Yeah,
and we see, for everybody, I think people have this perception when you see a live, even some of these insurtechs, right, that are connecting in other insurers, and they're well, they have everything, and someone runs in your office and says, you can do all this there. And then what we actually see is, in many cases, there's an in-between layer, right? And so there's a digital layer that gets the customer and the policyholder, doing the digital transaction, but then there's a middle layer, whether it's batches or maybe they don't have the API and the direct connectivity in stage one, and then they're able to do that. And that's very common from our side of things. There's things like payments and whatnot. There's a lot of things that need to be real time for these type of things, but then there's also a lot of things, given the legacy infrastructure, that we see as the in-betweens.
And prioritization is going to be really important, and continuously reprioritizing. We're revisiting that constantly. We have our list, we know what we want to accomplish, but the world's changing so fast. And like you said, 2020 was a shock. So we have to go back and just make sure that we're not making assumptions that are no longer true. So we're revisiting that constantly. and we're not just saying, yep, this is the plan. It's going to take a lot of reprioritization and a lot of us continuing to work together and figure out just how this is going to look moving forward.
Yeah, no, the prioritization and like having somewhat of an agile, like whether you're doing weekly sprints, et cetera, but then having an agile mindset to like what needs to be done for business is huge. Like an example of that, like we have a client who pre-COVID, literally pre-COVID, they had to have an agent watch the signature of a bunch of things. So whether that was the purchase or the change of X, like you had to physically watch it, and then COVID hit, right? And so something is even as I'm going to call it random as that signature, the end signature on many things, had to move and be reprioritized as to do business. We need to move this function to a digital process, right? And that can happen like, many of our clients, when they change a beneficiary, you may need to actually sign a document digitally, or like you're going to do that. It's not purely just the mobile, kind of the visual or Weber mobile feature change, right? That looks all digital, but then maybe you have to sign something to confirm. And so we're seeing an in between of like whether it's due to compliance, as you said, like just making sure you're dotting your I's and crossing your T's with the digital process there. Let's talk about like a lot of people, I'm assuming a lot of people say, well, let's get into the nitty gritty of self-service. Like what's the wish list or maybe, give me the order of the wish list here of like when you guys think of self-service, where do you start and like how far does the wish list go?
Well, the list can be never ending and it can be quite daunting. So we really want to focus, or what we're doing here is we're focusing on those self-service capabilities that's going to provide value to our members and those high volume transactions that we're seeing as well. Some of the self-service transactions we are currently looking at include digital delivery, digital delivery of the certificates. We're looking at some disbursement transactions such as loans and partial withdrawals, beneficiary changes, address changes, and then options for opting out of paper delivery of annual statements, potentially premium notices, and different types of correspondence. That's just the tip of it. I think there's a lot more that we can look at, but those are the current items that we are looking at.
Where's your team drawn that insight for like your wish list? Like I hear some of those things, like, is it more on I guess two-part question. Do you find that a lot of this wish list goes to the customer or the member side, or does it come to the business side, or is it both? From a value perspective, right? Because everyone, you're looking for value across the board.
And we are looking for value across the board. That's a very good point to make. But at the same time, we know that we can't have everything all at once. So we're really focused on those member transactions. We have a member website today, looking at the traffic that's currently on there and what are people looking for? What are our members looking for currently? Premium payments online, beneficiary changes. They have options to type in they're looking for a certain form or they want to do this digital. So we really used a lot of different data to make those decisions.
Okay. So the initial hit list coming from that data, and that's common. Like a lot of times we'll go into companies and they'll literally go to their call center where everything is led, whether the agent's calling or the individual, and they'll be like, here's the top 10 that like we have 30 FTE on, full times when it comes down to hours, because they can break it down. Some of these departments will have it. So, okay. And we'll move on here. But I mean, I think all that makes perfect sense. And also it's interesting to see, I always like seeing like why people are doing what they're doing and kind of how they got there. But it sounds like you guys had access to that some type of digital data or data point to suggest that these transactions were this is what people wanted to do. And so, we either keep with the current process or start giving them what they want.
And Dustin, I do want to mention, we did look at our service center transactions as well. That was data that we did look at. The volume that comes in with those is kind of key as well, because those are what transactions are happening in the members world. So there was a little bit of focus on that as well as our member website traffic today.
Got you. Well, no, thanks for that. Lori. Leah, so, what we kind of, if we shift gears, this is a big question. Actually, I think in the life market is like, does our policyholder care? Like, do they expect this? And like, what motivates them to do what they do? From your standpoint, what will be the factors that will motivate policyholders to engage with self-service and conduct self-service? And do you believe there's challenges as well? So like, how have you looked, what have you guys seen on this, or what's driving, this project here?
Yeah, I think that's a really important point. And I think it all boils down to user experience. So we can either motivate folks to initiate and utilize self-service, or we can very quickly demotivate them as well. So we have to be really careful about that. So one of the things that we know and understand is that a lot of our products aren't as intuitive. So we're not Amazon, where you're going to search for, garbage bags delivered to your front door. Our products and services are complex. We love jargon. So we have to be really, really careful that we're making the experience intuitive and easy for our members, because that ultimately will be what motivates them. I also think that given the status of some of what Lori referred to earlier, we do have these legacy systems that are kind of structure the way we process things. So I think there's this really big pitfall if you plan the member's experience or the policyholder's experience around that process. To me, I think we really need to take a step back, understand the process and what makes it the best user experience for that user. And then we have to go back and figure out how our back-end process will tie into that. So I think that we have to be really, really intentional about that and focus on making it a great experience. And ultimately for us, our representatives in our field, they carry a lot of weight with our members. So we have to motivate our rep to trust and feel that this process is intuitive, because then they're going to point to the member and be like, hey, Dustin, you can hop over that, log in, and you can take care of that on your own. If they're confident that that's going to be a good experience for that member, they're going to point them in that direction. A great example of this is their service center. They direct a lot of members to call in to do those transactions that we were looking at. So we just really have to make sure that they're going to champion this for us, because they're going to be using it to complement and free up their time too. Because a lot of these things that they're reaching out to them for, it's not efficient for our reps. We need them out having conversations, selling, and increasing our footprint. So when we can free them up and they have confidence in the system, that's going to be really important. So that's a challenge for us, but something that we're keenly aware of. So again, I think it's all based on that user experience and making it easy and intuitive to look around and do what you're trying to do.
Yeah, and I could say we've seen that, where I think one of the hardest parts when you have hundreds of thousands, if not many, people on this call could have millions of policyholders. I think there's this big challenge of like, these people our members, our policyholders, they don't know to do this yet, right? So ironically, we've changed them for, in some cases, 100 years to do this, and we need to let them know, actually, we're going to offer the experience that you were expected a long time ago, right? And that is a transition. We call that like adoption and then engagement. Like there is an adoption layer to your in-force book that needs to be trained. It sounds like, and having the organization in different parts, whether that's agent, call center, and digitally, all directing those parties to learn the new way that actually maybe in many cases people want is in many ways it's a change management process, but it's a good one, right? Because you actually have a solution for them. The other thing one of my biggest, I'm going to call it a pet peeve, but the thing I see so constant around the life industry is actually, we'll look at in-force, let's say we start there, but then as you look, let's say you sell 10,000 or 200,000 policies a year. The irony is half the time, maybe more than half the time, companies won't actually change what I would call the adoption at the point of sale. So you may sell, you're selling a whole new tranche. Let's say the average company is selling an existing 10% is churning or falling out of their policy length, et cetera. And then you have this other 10% coming in. And I always, what hurts me, what pains me is they'll wait till they're in force and then try to retrain them and re-digitalize them. But that's a whole new expense for all practical purposes versus if we all do this well for the next 5 years, actually all that new in-force book, the 5 years of incoming actually are trained on digital. In the same way that every digital bank trains us now, every thing we buy from, they've trained us to know that that's how we do things. And I think that is, I'll call it, admittedly, that is a challenge when you have a business that's between a couple years, but in most cases 100 years old, right? Is we've trained in a different direction. All right, so Lori, I go to you here. Can a completely tech-driven service portal ever feel human enough to gain confidence, right? Like, you guys have a captive agent channel. This is so important, and you believe in that human touch. But can it feel human? Can it feel human enough?
This is another great question, Dustin, and I think it's something that is top of mind for us, definitely, and many others in the industry. We really do feel we can gain confidence by making our member portal site, Leah touched on this, user-friendly and available at any time, while also continuing to provide that human touch for more of those complex questions through our field reps and our call center, our service center. So we really want our member portal to be easy to do business with, and of course, provide that information that our members are looking for and that they find value in going to that member portal. Leah and I were talking about this a little bit, and we think the bigger question is, does our member portal need to have that human feel? Or by providing an easy, intuitive way to interact with us, does that provide that level of confidence that we are easy to do business with? Is that what the member's looking for? Does that provide the confidence? We feel it does.
Mm-hmm. Well, I'll jokingly say, right, when we send a form over, right, that has all these blank fields, even if a human sends it, right, it's challenging, right? Like I would say that's something as an industry we struggle with. We send very large and, complex forms, and they're not necessarily intuitive. And I'm educated in this space, and I still buy a lot of these policies, but I'm looking at them like, oh my gosh, so how could someone else figure this out? So not very human on that regard, right? So,
right.
And I think one interesting thing is, asking ourselves, where does this line meet? Like, we're a human-centric company, we're a member-centric company, but like, I think you said it, like, what does the member want? Do they want a human? Because that would, once again, at 1 a.m, do they want a human to do something? I always say that. Well, no, probably not. They don't want to call. If you had 24-hour call centers, do they want to call at 1 a.m.? Is that common? Or could they take action on X amount of things digitally? Is that what they want from, Modern Woodmen? And the answer is out there, actually. I think the encouraging part is everyone's learning. I've been on this journey for, 5 years in this B2B space and learning from and I would tell you, everyone's grabbing new forms of data. Even it's very hard to summarize the industry based on, certain reports or what you hear from, someone else in the industry, because we all have different customers too, right? So depending on the type of product you sell, the type, the way your agent targets, or the way your D2C targets, or you name it, right? These are different individuals, right? The 55-year-old is one, the 24-year-old is another, and that's another challenge, right? No data is kind of the same. So how are you personifying? And that's where I think it's all about giving. Actually, with digital, it's in some ways it's easier to kind of cater and persona or personalize those experiences than it is, for example, just with a human, right? So we have data that can validate this is this type of persona, we can do X versus the other way around. I think claims is one of those things too. As an example, when we talk about service, I was reading a lot of reports this last week, and claims is still, in life insurance as an example, is still, no one's really doing it fully digital, right? And I think that points to the question of humanness. It's one of the toughest things in your life when you're going through a claim, and life insurance is an example. And so does I say, I don't have an answer for anybody on this call, but like, does the human on the other line, the member that's lost someone, and they're a beneficiary, do they want digital or do they want human? That's kind of the areas that like I get exposed to, and there's a lot of things going on there, but very interesting to see how that goes. My answer.
Probably.
What's that?
Reality is probably the answer is going to differ by person. So you have to have all channels available because it's based on user preference, and no one's preference is going to be the same. Like different people, different generational differences, different life experience, it's all going to drive a different expectation. So I think in many ways we have to make sure that we're providing it no matter what their choice is, so that we're well positioned to serve them in the way that they choose. It's not about what we want, it's about what they want. And that's a huge mind shift, I think, for a lot of our industry.
Right, and I see Kevin here in the chat says human, right? So thank you, Kevin. And it's funny, it's one of those things. I think what I like to say when I'm in front of a room, right, is well, let's tell, what does the data say, right? Like, have we even asked that question? Going back to 2015, 16, when I was running around getting this thing off the ground, I will tell you, so much of the time people would look straight at me and just tell me, this is the way people want it. This is the way it's always going to be. And what I found is that, we're waking up, it's 2021, and so many things have changed. Like, there was a time where it was just like, we can't launch digital properties because agents want to do all that. And then later on, you find out that certain types of agents would love for that capability to be there because their admin staff has to do X, Y, and Z, and they want to drive their business, right? And others, just so everybody knows on the call, it's not uncommon when I go places, people say like, we have like a long time agent that calls in and says these things. And so they'll use that. That's the major data point. My always question is, and I'm not disagreeing, by the way, we service agents too. So it's like, we're agnostic, but I always want to ask, and I ask the board, but what does the data say? Like, if you gave all agents this, like, have you done a survey to understand if they would want this, et cetera, right? I think it's a fair question. I try to be as agnostic as possible. And then, maybe the data does say that that's what they want. But then the next question is, if the agent wants that, which we think in many cases they want the higher level stuff, well, what does the member want, right? And so there's all this balancing going on. And I think where the word we commonly use is omni-channel. We think omni-channel is key to give, I'll call it, give everybody what they want in many fronts, or at least have a 80-20 there. Let's see. I'm going to look at some questions here in a minute that people are typing in, but let's see. So Leah, where are the areas across the business continuum where self-service can save the most time and money for the company? This has got to be an area that's driven some of these decisions. So let's hear the, your guys' view here.
Well, obviously, seeing some of the comments and whatnot too, we agree that human element is still very important in this business. So we believe in personalized advice. People are doing research online, yet they want that personalized advice face-to-face. And that is something really important to us because we're that captive career agency system. So we are heavily invested in our rep. But what we see here is that there's many, many opportunities to complement that relationship. So that's everything from during the sale to the lifetime service of that member. There's many, many opportunities to do that and to utilize some efficiencies and really have some long-term savings across the organization. So that can be anything from saving postage and paper, like Lori had mentioned, if we're opting out of some of those paper mailings and whatnot. We can reduce those calls to our service lines and free up their ability to have better, longer interactions with members in those cases where they're calling in and need that more high-touch service. So that's really important. When they need those, we don't want them holding for a long time. That's not a great experience. So we also need to find opportunities to cross-sell. So that's really big. They buy a product with us, but how many products do they have per household? We know that loyalty increases with an increased number of products per person. So we really need to find those opportunities and make sure that we're connecting the rep back to the member when those opportunities are shown through some of these self-service. We also think that there's an opportunity to reduce processing time to provide quicker, better, faster service to reduce errors. And another thing that we haven't really touched on very much, Dustin, is the fact that we are a fraternal. So we do offer these programs benefits that are very different within our industry. And if we can connect with our membership and engage with them through those fraternal offerings, that's a big deal for us. So we're going to be able to offer our unique and exclusive member benefits through this site, we're hopeful, and also to better increase that engagement with our folks, because they are very, very, they have a high level of affinity with us because of our structure. So we feel like there's an opportunity to increase that as well. And when you're looking at that fraternal interaction and opportunity to access some of those things that truly differentiate us, you can't assign a cost to that. It's essentially priceless, some of the things that we're able to offer in that venue. So we're really excited and think there's a tremendous opportunity to have a lot of not only hard dollar cost savings, but all these other incremental wins along the way.
Yeah, would you, I'm throwing in a question here. Do you, as an org, do you notice more talking, and this is honestly, like, it comes up in my life so much. Do you notice more of the conversation internally about, as you said, the hard dollar cost savings, or do you notice, and once again, this is a perception thing, or do you notice people really talking about, hey, we're differentiating, we're creating kind of the experience we need to have here in 2021 and being who we want to be? And I always, because I get to get on both sides, right? Because depending on who I'm talking to as a deal goes through, but how do you guys see that, or is it the balance here?
I mean, who doesn't love a dollar savings? I mean, I think anyone will tell you that costs are important, but for us, ultimately, providing that great experience and having some of these other items, I mean, when we look at it, our fraternal engagement is just as important to us as some of those dollar savings. So I think you really have to look at our member experience and affinity and all that different interaction. That's just as important to us. And in fact, many times, that's the focus of our conversations. We feel like the rest of that's going to follow with this. And it gets really sticky too when you start assigning some of those hard dollar costs anyway. So to us, we feel like if we can just focus on this experience, the rest will follow.
Got you. I got another question, to hopefully, I don't know, Lori, did you have something to say? I'm sorry.
I was just going to say Leah said that very well, but yeah, it is.
Yes, she did.
It's the balance. It's the balance part of it. You can't just say costs don't matter, because they do, as well as what are those, again, focusing on the value added transactions that our members want. I don't know from our point of view if it's just we put every transaction out there, because it's probably not cost effective at that point. What are those ones that are easy to do that the members will find value in as well? It needs to be the focus.
Mm-hmm.
All right, so I'd love to, the last couple of questions here before we shift over to the chat bar. So please type in and we'll get to those here in a second. But the first one is where's Modern Woodmen won in the insurance industry, and how have you won in servicing, right? Like we want to hear about these, people want to know where the winnings.
So we believe that first and foremost, we're financially strong and stable for our members, and that's the biggest win that we can offer. We've been around for more than 135 years, so we have longevity, and we have a history of keeping our promises. Another big win for us is our fraternal structure. And again, I think there's a lot of emphasis right now on corporate citizenship and goodwill in communities, and we feel that's great. But it's nothing that we're doing because it's the trend. It's who we are, and it's built into what we've done for those 135 years. So we're really proud of that, and we feel like it differentiates us and helps us to make that impact for our members and in their communities. So, but ultimately, again, too, we're really proud that we're still captive. When our reps walk into a home, they're offering Modern Woodmen products, and we're very proud of that. And we feel good that our reps feel strong in our ability to keep our promises on those services and products as well. So I think we've had a lot of wins too with how we arm our reps to provide those tools. We have a robust e-app. We have a member portal right now that we're improving. So I think we have a really solid framework to build upon, and we're really, really proud of that. In fact, last year during the pandemic, we were able to quickly make some changes and mix up that tool set. And what we saw was our reps were able to have that business continuation, continue to help their members and provide that great level of service. And we had a great year. So we're really, really proud of that. And again, in a heavily regulated industry, I think we've done other things to make sure that we keep our members top of mind as well. So our reps have a really strong digital presence. So they have great customizable web presences. They have social media. So we have really close partners across the organization where we've been able to create these opportunities for people to get to know us, interact with us in the way that they choose. And we feel like that's a really big win.
Got you. And Lori, like kind of that's where you have one. And as let's look for everyone, everyone always asks me like, well, where are you going? Right? Like we want to know where you're going at Modern Woodmen in 2021 and beyond. And ultimately, where's the industry going here?
Sure. So when we look at our digital journey, our first phase is going to be released this quarter to our member portal, which is introducing the new platform with Surify and also the Modern Woodmen app. We're very excited about that application on mobile devices, providing that opting out of paper for our annual statements. That's going to be the first opting out that we're going to offer. And then as we look down 2021, possibly into 2022, the next phases we're looking to offer, I think I've already mentioned about the digital delivery of our certificates and some of those self-service transactions that we mentioned earlier. We'll continue to focus on other correspondence that, we can provide in a digital format on the member portal, such as potentially premium notices and other correspondence. Leah, did you have anything to add to that digital journey? I know you're involved in that as well.
Yeah,
very much.
When Lori and I were talking through this, this is one of these questions we kind of laughed at because we've commented, who knows? Last year, we weren't expecting a worldwide pandemic. So it's taught us really the need to be strategic yet flexible and ready for change. And a lot of this for us means a big part of our digital journey is going to be building collaborative relationships across our organization to work together. Lori and I are a really good example of this. I mean, I'm on the distribution side, she's on the marketing side, or on the operations side, and we're working very closely together on this. But we're also working really closely with our legal team, with our compliance folks. It's going to come down to even actuarial product design. How do you design your products to look forward and to offer digital service long term? That's all the exciting things I think that are on the horizon. And so it's all going to start with that relationship building and collaboration across the organization, because we have to have that shared purpose and prioritization that this is where we're going and what we want to accomplish together. Because Lori and I know we can't get this done alone. We have to help and reach out and ask others to help us build this journey. And so I think that's going to be the key for all of us, is to make it a priority and have those shared goals and work cross-functionally to make that happen. But yeah, we're kind of excited to see what happens, because again, like so many of our worlds changed last year, that it just spoke to the need to be flexible and not to tying in too much to your vision, because as soon as you have it, it's going to change. And so right. I think that's really exciting. I know other people, it terrifies them, but I find it to be exciting.
Yeah, I mean, I feel like I've got some kind of seat. I don't know if it's front row or middle layer, where, P&C and health, and they've all had their time. And I really feel like life insurance in particular, whether that's at a P&C company, whether that's just life insurance company, whether it's like, because we, divisionally, right, they're finally having their moment here in the last year and the last couple of years. And I think looking forward, I mean, there's hundreds and hundreds of life insurers. And I feel like that moment that we've seen, I believe we've seen much more of in health, due to, kind of the world, the healthcare system, and then mixed with, P&C, whether that's telematics and kind of the auto companies being on the front. I feel like we're finally getting that moment, and it's going to be fast and agile, at least relative. I'll use the word relative to the world we've all lived in for so long. Let's shift. We have few more moments here, 8+ minutes, and I want to look at some of these questions here. I think I'm going to start kind of at the bottom, and I'm going to But one from Matt here. He says, you mentioned that there's a generational difference between how folks want to interact, right? And let's just say, yeah, that's a truly fair statement, right? So I think we can all agree on some level that does happen. But so because of that, are we actively engaging them differently because of age? So look, I want to partly answer that because I'm seeing a lot of data across it. So I would say yes, people of different ages, just by virtue of like not growing up with something, like I'm not a Snapchat guy, but I have Facebook and Instagram, right? Like I miss that, right? I'm not to say that older people don't use Snapchat. It's just I kind of miss the craze, right? And so
How about TikTok? How about TikTok? Are you on TikTok?
No, but I see all the videos getting pushed to my Instagram, so I'm not missing out, I don't think. Okay. But I think that is it's a good point. But the comment that I want to make there though is when we look at the data though, what's crazy though is that same thing that you would say 75-year-olds don't want to do, comparing that with a 25-year-old, the challenge that we're all in is technology has had no boundaries on converting a 75-year-old to be on Facebook, as we know they all are now, right? That's like a foregone conclusion. But remember, at first it was the college students when Zuckerberg released it to colleges that changed first. And I think we're at that moment, right? Like Uber, right? It was for a while, it was only the people running around and, kids going out drinking that used Uber, right? Or business people. And now all of a sudden it's like, no, instead of calling a taxi, my grandmother would call Uber. And she tells me that's my first time I've used it. And, it was so great. And then, so what I'm seeing, and this is happening now on life insurance servicing and engagement and buying, right, is age. We need to look at the persona to change things, but the data that we're getting on the Surefy side is it has no boundaries. You can't treat two 75-year-olds or two 24-year-olds the same. That's the problem. This is the challenge that we're in, because they actually, a 25-year-old and a 75-year-old want to behave the same, and then another 25 and a 7-year-old, that persona. And that's a challenge because we can't bucket them as we all want to. But we, on our side, we are creating personas based on actions. So if you can learn something about that individual, like they're a non-digital persona or they're a digital persona or they want to do X, that's how you personify them more than just strictly an age. So that's one comment that we've seen. Lori?
I think that's very fair. I think too, it's longevity as a member too for us. If someone's done business with us for years and years and years, like they may be more apt to call the rep or call in. But generationally speaking, the first thing folks are going to do is pick up their mobile phone and try to find you digitally. Like that's the future of it. So I think moving forward, no matter the age group, they're going to grab the phone and try to interact with you that way. That's just the reality of the world we're living in now. But for us, I think it's fascinating because if they have been with us for a while, it's a really interesting desire in how we'll switch up some of that behavior. And then there's the folks who go online, but still, I can't tell you the number of people who still won't make online payments, which I think is really generational because younger people don't have a checkbook. They're like, what's a checkbook? Yet some of the other generations, they're like, yeah, I'm not willing to give that up yet. I need that. So I think there are little idiosyncrasies where it's hard to paint a blanket picture across all categories. I think it come down to the different transactions. I don't know, Lori.
We totally have seen that where people jump to, we want it all digital. We're gonna push this on our users. We need to make that change. And then like 6 months later, it's like, and we need an amendment. We need to create that capability because we have a pushback. And like, so once again, this is the world we all live in. And I think, if you don't start fresh, right? If you don't start with a brand new and just defining that's what this company is, I think there is more challenges there. Feeding into that question, someone's asking about adoption rates. I have the luxury of seeing adoption rates across a lot of different companies. So that is a really interesting question and one we commonly get. Like, what they're asking specifically. It looks like they're asking you, Darren, and you definitely don't have to answer this, but they're saying, what are your existing and goals for member self-serve self-service portal adoption rates. I think this is a great question, whether or not we answer it specifically or not. So I'll throw, if you guys don't know the answer, then, we can move on, but I have some stuff to add too.
We know very clearly the number of members that we have logging into our current member website. So we're very closely tracking that. And we have set goals for the percentage of folks that we want to have logged into the member platform moving forward. And then the other parts are kind of trickier because we know some of the different metrics with how much premium we're bringing in with our online payments and some of those other features. I don't know that we have the data to break down unique users on that, Lori, or whatnot, but we do have our goals set, and they've been set for us to by our executives of what they'd like to see happen as well in the adoption rates. The big thing for us too is we have a solid block of people who've come in and registered, and then they don't come back on a regular basis. So frequency is a big goal for us, is we want people coming back in and finding value and visiting the portal more often. What do you have to add to that, Lori?
Yeah, I was just going to say, we definitely have goals. We're going to have metrics in place so that we can measure this along the way to see what traffic is like on our member website, what premium payments, digital delivery certificates, all of that. We'll be tracking that, and then to see if we meet our goals, for one. And then we may have to change some things up if we're not meeting those goals as well.
Yeah, a connected thing there. Sharon asked, how are you driving traffic to the member portals as new features become available and driving fraternal engagement? I want to add, I think that's a great question because it gets in, I think a lot of people sit with like a capability, which is technology, and that's problem one. But tactics and having a program to convert people that are non-digital to digital, but then also driving those that are brand new policyholders, that's a huge area. And Sharon, that's a great question. How do you guys have a plan there on, as features come available, how you're going to drive people and keep them going?
Yep, we have a whole game plan for how we're going to drive engagement. Again, we have a little differentiation. As a fraternal, we have a quarterly magazine that goes to all our membership. We have a lot of different touch points available to us that we plan to strongly utilize. And again, our field tours is going to be key for us to drive them to the portal as well. But we're looking into all sorts of different techniques of how we can reach out to directly to our members to let them know and to offer up those new functionality and experiences. So we're developing that game plan right now, and going into uncharted territory for us. It's exciting.
Yeah, this is, I'm going to have to conclude our time here, but that is such a great question, because I will tell you, as we've gone into InsurTech and working with large insurers, I think technology is one piece, but working with providers and or having teams that understand how to kind of run a program alongside and understand what the expectations are, aligning management and rolling that out. It's just a huge area, because as the saying goes, you can't just throw technology at people, and you want to have good expectations. I think that's the big thing. And a lot of people here are asking, what are the expectations? I think working with people that know what the expectations will be or should be is part of it. And, I've seen people present to me before, like, we're expecting 90% adoption. And it's like, what are you doing, right? Are you going back to in-force policyholders? You're going to mail them something and they're all going to adopt? Like, let's realign those versus maybe you can expect 90 or even 100% adoption if you force them to go digital when they buy, right? So that's my parting comment with everyone today, that, these are real challenges. Many of you are facing them together, and, we will get there. It's the life insurance moment right now. So let's make each other proud. Thanks so much, everyone. Thank you, Lori. Thank you, Leah. Thank you for a couple hundred of you that joined, and we look forward to speaking soon. Bye-bye.
Thank you, everyone.